That was the day so far. Hello and welcome to Closing Bell, live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar, with me Surabhi Upadhyay, and we've got Nigel D'Souza in the newsroom. Surabhi, hi. Nigel, hi. Another positive session for our markets, the seventh one in a row. The Nifty right now, as we speak, is exactly at that 17,700 mark. It's come off from the highs of about 17,750 that it hit closer to 10:30 a.m., 11 a.m. After that, markets went down to levels of almost 17,650. So from there, it's managed to recover. So the top has been sold off, but the bottom has been bought into, and the markets are cruising along right now with a gain of close to about 0.5%. Mid-caps today are trailing a bit compared to the frontliners. So the mid-cap index is up close to about 0.5%. Banks are supporting the markets. The Nifty Banking Index is up nearly 1.25%. Metal names like JSW Steel, higher in trade, FMCG, ITC particularly. Autos are seeing buying. The only drag today is coming in from the IT index ahead of results from TCS and Infosys. The Nifty IT index has roughly a weightage of about 15% on the Nifty, and that's under pressure. The Nifty IT index down close to about 1.5%. What's aiding the up move is the IMD forecast. Contrary to SkyMed is saying that we are going to have a normal monsoon, though they are keeping a lookout for El Nino in the second half of the monsoon. But so far, at least, the prediction is that it's going to be a normal monsoon. Europe too, which has opened up after a long weekend, has opened up with strength and gains of anywhere between 0.5% to 1%. But watch out, guys. It's the financial Nifty expiry today, and banks is where all the action is. But the last 1 hour could be tricky and important.
Absolutely. For the time being, I was looking at the three of us together. We should get Nigel on the screen as well. Shall we say the markets in the pink of health? Yes, you guessed it right. Well, wasn't planned, but it just kind of turned out that way. Shades of pink, not bad. It's always a nice color to have. Nigel, would you agree?
Yeah, absolutely.
Okay. Well, to Reema's point, I think today it's a tale of two halves in the market, right? Because banks are really making up for the pressure that IT is exerting on the downside. And more than that, it's actually IT which is the only down sector in the market. Otherwise, we have a fair amount of contribution coming in from some of the FMCG names as well. But in any case, the fact is that the market is running into a congestion zone. This is pretty much from where the Nifty had turned southwards exactly a month ago, around the 9th of March or so. So the Nifty, of course, is trading above, has been trading above some of the key moving averages, 20-day, 50-day, the 200-day. The congestion zone comes in around 17,750, 760, going up to 17,800. And today's intraday high was exactly at that congestion zone mark. So the Nifty needs to take that out for the up move to perhaps continue. Banks are, of course, the big support zones. The question is, can the banking momentum continue beyond the expiry phenomena as well? The next level for the bank Nifty that I would at least look at is the 100 DMA. The bank Nifty is anyway trading above the 200 DMA. 100 DMA comes in at 41,700 thereabouts, 720 thereabouts, and we're a little distance away from that. But there's serious momentum in the banking side of the market, fueled by a lot of those very strong quarter updates that we got. So that's something that's playing out. The only sort of caveat is that incrementally speaking, the small cap index and the mid cap index, they're not doing as well as the large cap indices. But look at the market breadth. That's probably a better barometer. So the indices, as you say, just up about 0.3% or so. But the advanced decline ratio has been very healthy for most parts of the day. Even now, there are over, I think, 1,800 stocks that are advancing. And about 1,000 or so on the declining side, though the lines have narrowed. But in any case, there's a fair amount of traction on stock-specific basis as well. Nigel, what would you say? What trends are you reading into today?
Well, I'm looking at the options data, actually. The 17,650 put, that's fairly active. That's one of the most active strikes in today's trading session. So we need to keep an eye out on that one. And there is some writing that we've seen at that particular level. So just to give you a data point, the total open interest build up out there is close to around 20 lakh shares or thereabouts. So the premium is at around 30 rupees now, but on average should be around 70 to 80 rupees also. Clearly signs of writing being seen at that particular strike. On the upside, the 17,700 call, yes, we're up close to around 100 points or thereabouts, but it appears there is some signs of writing even at those levels. So just plugging in that number, 17,700 call, the premium is around 60 rupees. You add the 60 rupees to around 17,700. And the resistance level comes in that vicinity of around 17,750 to around 17,800. As I've been saying over the past few days, we're at the upper end of the band. We need to cross the 17,700 to around 17,800 odd zone. And if we break out from here, then in fact, maybe we'll start talking about fresh all-time highs. But for the time being, the bears are putting in a bit of a fight, and I think the next few days, the IT index will give further direction because no worries with the Nifty Bank. It was finding some bit of resistance in the last couple of days at around that 41,300, 41,250 odd mark. Today it's broken above that, and for the last couple of hours we're trading above 41,300, which is a very, very bullish signal. So no worries on the Nifty Bank. Financial Nifty expiry will take place in the next 60 minutes, but for the time being, that's working in favor of the bulls. Let's see whether or not we can get closer to around 17,750 on a closing basis, guys.
Okay, that's going to be the key level to watch on the Nifty and on the Bank Nifty. Let's tell our viewers what we've lined up on closing bell today. A whole host of stocks are on our radar. Auto stocks race with Bajaj Auto trading at fresh 52-week highs. Maruti ticking higher post a fresh brokerage call.
On the downside, IT, of course, sees pressure ahead of the earnings season, so some analysis coming up around that.
Kotak Mahindra Bank gains on expectation of it getting a higher weight in the Morgan Stanley Composite Index. The review of the global index in May will factor in more room for foreign investment.
We track technicals with Jay Bala of cashthechaos.com, and we'll talk fundamentals with Ravi Dharamshi of Value Quest Investment Advisors. All that and much more over the next 60 minutes.
Well, how